Hello, ladies and gentlemen. Greg Mikulowski with the Kickstart video. Today's date is September 12, 2024. In the Kickstart video, I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Looking at the euro versus US dollar from the hourly perspective, we did have the ECB cut their rates as expected, both the deposit rate and the refinancing rate, and the euro versus US dollar moved higher after that. It may also have been impacted by the PPI data, which came in mixed, a little bit better than expectations in some ways, but didn't change the Fed expectations going forward. But nevertheless, the US dollar has moved a little bit to the downside, and that helped to push the euro versus US dollar to the upside. However, look at the blue line right here. That blue line represents the 100-hour moving average. Also, look at the 38.2, the broken 38.2% retracement of the move up from the August high. That level comes in at 1.10389, just below the 100-hour moving average, around the 41 level. And the price moved up to that, both those levels, and found willing sellers against it, pushed the price back down toward around the 110.26 level, and we have since moved back up toward the 38 level. So we're pushing up against the 100-hour moving average, pushing up against broken 38.2% retracement. If we do move back above those levels, that would tilt the short-term bias a little bit more to the upside with work to do. And the work to do would be to get back above the 200-hour moving average. That's the green line in this chart. That level currently comes in at the 1.10568 level. So get above that level would increase the bullish bias, put the buyers more in control in the short term with a move back above those levels. Staying below those levels keeps the sellers more in control. We did move below the low prices from, I guess this is Tuesday's trade here, and early Wednesday, in late Wednesday, and again today. Today's lows could not get below the low prices from yesterday, however, helping to give the sellers some concern and give the buyers some confidence to push higher after the PPI, after the ECB press conference. So watching the technical level right here, we'll see if it can hold resistance and push back to the downside or not, and move up toward the 200-hour moving average. Take a look at the dollar versus yen. It is moving, or it has moved to the downside as well. Lower dollar once again, and what we saw in this currency pair was another failed move above the 100-hour moving average. Just a blue line in the chart. Note that on Tuesday, the price moved above the 100-hour moving average here, found resistance sellers against the swing area through here, and trading here today. The moving average is lower, so we didn't get up toward this swing area. That would be a target on the top side, but in the Asian session, we moved up and failed. Tried to stay below and then move back above. In the European session, tried to stay above here, but again, moved below it after the PPI data and the, obviously, but moved back below it after the PPI data and the just dollar selling that we're seeing so far in the early U.S. session. The price has moved back down toward this swing area. As the swing area is defined by a number of different swing lows going back to August 5th. That's the day that the Nikkei index fell minus 12.54%. Then we moved bounced off that level, moving to the upside, and then came back down to this level again on trading last Friday. This is the jobs report, pushing the price back down toward that level. We fell just short of the low price at 678 and rotated back to the upside. Did all this movements above and below the 100-hour moving average this week, and now moving back down toward this swing area. Move below the 141.67 to 94 level. That's this area right through here. Opens the door for a rotation back toward perhaps the 140.80.807 level. That level corresponds with the low price going back to the first trading day of the year. That's this price right here, and we went below that level in trading yesterday, down to 140.70, but could not sustain the momentum down to the end of December low price, which is down here at 140.24.8, and we rotated back to the upside. So all this, these lows right through here, led by the 140.80 level. Again, that's the low price from January, first day of January 2024, January 2nd to be exact, and the so be aware of that level on the downside if we're able to get below this swing level down to 140.1678. Again, the low price from August. Finally, let's take a look at the sterling versus U.S. dollar. Again, we'll look at the hourly chart. And what we saw in trading yesterday was a move below the 38.2% retracement of this move to the upside, the August low to the August high, getting below that level gave the sellers the go ahead to push to the downside, but we could only get to the 130 level, 131, so that's 1.3001 was our low price from yesterday, just above the 130 level. And a nice natural support level, and the market rotated back to the upside. As you can see, we moved back to the upside and moved back above the 38.2% retracement. We always have that earmarked as a level of key importance, and we did fall below that level, and then for the most part tried to stay above that level in the Asian session, the European session, trading here today, and also in the early U.S. session, holding the 38.2% retracement. So this level is kind of holding up and creating a floor at the 1.3036 level. And as you can see, we're moving to new session highs on the top side. We have the 100-hour moving average at 1.30828 as the next key target on the top side. So the battle goes on between the 38.2% retracement and the 100-hour moving average on the top side. You might earmark this area right through here at 135.1 area as a level of importance as well. That level corresponded with low prices here and high prices here and here before moving to the upside, came back down toward that level here, rotated to the upside, and then fell below that level and tried to use that level as resistance in trading yesterday. As you can see, we traded above and below the level, and trading here today as the market kind of figures out what it wants to do. So these are the wide levels, and in the short term, if we can hold the 130.51 level, all the power to the buyers, at least in the short term, for the sterling versus US dollar. So that's my look at the three major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.